Ladies and gentlemen, welcome back to the channel. Here in this video, we are going to get into everything you need to know about the markets this upcoming week and the extreme volatility that we could see. There is a huge catalyst coming on Thursday, huge earnings on Tuesday, Wednesday, and Thursday that are going to move the markets big time. And you don't want to miss what we have for you here in this video. So let's go ahead and get into it. Hit the like button and subscribe to the channel. Thank you for tuning in. I hope you guys are enjoying your weekends. And just know, no matter what financial situation you are in, you are above about 99% of other people that are walking the streets, other citizens, in terms of financial education and trying to better your financial future. If you're trying to do that, if you're watching these videos, you are already ahead, okay? It might take some time. Your journey might be long. My journey's long. Your journey's long, I'm sure. But you will get there, okay? Things will turn around at some point. So let's go ahead and jump straight into it. I don't want to get too philosophical on you guys. But nonetheless, this week is definitely going to be one that might test a lot of you guys because the potential volatility is huge. Now, this Israeli conflict is obviously a problem and it's not getting better. It looks like on Saturday alone, 6 members of Hezbollah were eliminated. This is obviously not great news for any hopes of de-escalating this conflict. It looks like it's indeed doing the opposite. It's escalating at a degree in which that is just not okay, right? This is probably going to get worse before it gets better. So as we go through earnings, as we go through the data for this week, you guys got to remember, if you get news that Israel has made its incursion into the Gaza Strip and all heck, I don't want to get demonetized here, but all hell is breaking loose in that area, right? Whether it's Iran, whether it's Hezbollah, Hamas, or any other militant group, with potentially the U.S. being involved at that point, it's not going to be great for the markets, no matter what is happening in the markets. We've seen this lately, and I want to highlight this for you. Gold is up about 9% since this conflict has started. That's a wicked move on gold, okay? That is definitely up there in some of the most aggressive moves you have seen in gold. The last time you've seen a move really like this, I guess, was back here in March of 2022 as the Fed was starting to raise rates. Markets were kind of crashing, recession, right? You technically had 2 negative quarters of GDP. Investors were obviously fearful. And then before then, it was Omicron, right? The fears towards the end of 2020, around that, obviously, we figured out that it was going to be kind of the same old. We were going to get more money printing, all of that. Markets ended up loving it. But gold, did very well. You're seeing another one of those moments, and I think gold has room to run here. This is important because it's seen as a safety asset. People don't buy gold because they're super excited about the global economy and stocks and, bonds. They buy gold because they're fearful that if the dookie hits the fan and the fan starts spinning, they don't want to get too dirty, right? They want to, have their capital, preserve their wealth. Big money moves gold. Retail investors, small guys, you don't move gold. What you seen on Friday as well is KRE, the regional bank ETF, was down 4.25%, 4.26%. You've kind of baselined out here. If you do get worse from here, it's not going to be great. You're trading lower than where you were when SVB happened, right? So if money continues to flow out of regional banks, that could turn around to be an even bigger problem. Now, on Friday, you did see yields actually come down on the 10, 20, and 30-year bonds. This is how you can look at it. TLT, the 20-year Treasury ETF, by far the most heavily traded instrument to track bonds. That was up over 0.5% on Friday, about 0.65% on Friday. This is good in terms of driving yields lower, potentially driving stock valuations higher. But it's just not great because it's a risk-off asset. It's what investors buy when they're fearful of, again, global conflicts or wanting to preserve their value. And take a look at the volume you have seen on TLT2. The volume is huge. Nothing like we have seen, in basically forever. I mean, it's been a very long time. I don't think you've ever seen volume like this on TLT, right? A lot of selling volume, a lot of buying volume. It just really depends. Last week was a net bad week for TLT. You were down about 5%. If TLT continues to fall and bond yields continue to soar, that's not going to be great. If investors buy the bonds because they're fearful, well, that's not exactly going to be the greatest thing either. So there's really not a great outcome here potentially for the bonds. Now, big story might not be the bonds this week. Probably it's going to be earnings and this economic data. So on Monday, you're going to get Cleveland Cliffs. You're going to get some other companies that a lot of you guys don't care about. Tuesday pre-market, Coca-Cola, Verizon, GE, RTX, 3M, ADM, Spotify, Next Era Energy, Centene Corporation, and GM. Tuesday and after hours, that's going to be your big day, I think, for really all of this earnings season. Microsoft and Google. Those are your big guys. Now, you obviously still have your Meta on Wednesday. You have your Amazon on Thursday. But these are really the ones where if you get bad earnings out of Microsoft and, Google, Alphabet, it's really not going to matter if Amazon has okay earnings, right? If these stocks come down and people do not like those earnings, markets are not going to be in a great spot, okay? You then have Snapchat as well, Tuesday and after hours. You have Visa, Teladoc, Texas Instruments, Boyd, Range Therapeutics, and Weatherford. Wednesday pre-market, Boeing, Thermo Fisher, T-Mobile, Hilton, ADP, General Dynamics, and Lithia Driveway. If you do take a look at, let's see, Wednesday after hours, you have Meta, IBM, ServiceNow, Align, KLA, O'Reilly Auto Parts, Baker Hughes, Analy, Edwards, QuantumScape, more companies there as well. Some of these will be important too. IBM, Meta, don't discount them, but they're just not going to move the broader indexes to the nearest extent that Microsoft or Google will. Now, Thursday pre-market, Royal Caribbean, UPS. UPS is always an important bellwether for the state of the economy, so you definitely want to be watching that one. Same thing with Amazon, Thursday and after hours. That one is definitely seen as some degree of a barometer for the broader markets for the overall economy. So you definitely want to watch that one as well. Thursday pre-market, again, Altria, Southwest, Tractor Supply, and Merck. Again, Thursday and after hours, Amazon, Enphase, Intel, Ford, Chipotle, Dexcom, Skechers, United States Steel, Capital One, and Vail. Friday, typically, as you normally do, you have AbbVie, they are a healthcare name, a couple other healthcare names, and then some oil companies, ExxonMobil, Chevron, Phillips 66. You actually have Charter Communications as well. These guys are ones to definitely watch for in the oil space, especially as the price of oil has risen so much recently, again, like 10% within the last week. If you do get, these companies reporting good earnings, well, the stocks could be prone here to make some pretty big moves higher. Now, let's get into the economic data. Now, we're going to cut to the chase here because there's not much for Monday. There's not much for Tuesday. For Tuesday, you're going to get German consumer confidence, UK unemployment rate, German manufacturing PMI, inflation rate out of Australia. None of this is going to be all too important for our markets. Wednesday, you're going to get the Bank of Canada monetary policy report and the Bank of Canada interest rate decision. They are so closely related to the US. This could be important, something you definitely want to be watching for. But unless you get a surprise action from their Fed equivalent, you're probably not going to get a movement in our markets based on that. As long as it's kind of what we're expecting, probably not going to have the biggest reaction. Now, on Thursday is when things really heat up. You're going to get durable goods orders month over month. The expectations for data this week are so high, I just don't know how they could come in better. Let's just be honest. Durable goods orders month over month is expected at 0.6%. Some people are forecasting 0.7%. Last month's number was 0.2%. So you don't have low expectations. You have very high expectations. Now, those could move heading into the actual data report itself, but there are still going to be high expectations here. Now, GDP growth rate, quarter over quarter, advanced data for Q3. This is the catalyst I've actually been talking about for a while here on the channel. Last quarter was 2.1%. You're expecting 4.1%. 4.1%. That's insane. I've actually talked about this with the Atlanta Fed GDP Now tracker. This is what that is. And I said it before. This data report comes out October 26th. And your average economist is actually expecting around 3.5%. Your highest end economist is around 4.6%. Your lowest end economist around 2.5%. So anything under 2.5%, that could potentially be a black swan for the markets. That could be a really negative event, fall 5, 10, 15% maybe. Couple that with escalating conflict in Israel, other things, maybe bad earnings by this time. And this could be a cherry on top moment of just really bad data that maybe doesn't live up to expectations, that could be a big clapper for our markets. Either way, though, it just looks way too high. 2.1% was the number we had last quarter, and you're expecting 4.1%. Some estimates are 4.7%. I mean, you're going to have to come in hotter than that for the markets to be excited. But you are living in a weird market environment where if you get a GDP report that I think if it's 4.1% or higher, markets are going to say, hey, that's way too high. Bond yields need to go higher. Bond yields are going to shoot higher, and that's not going to be great for the markets. At the same time, if you get a GDP report that's 2% or 2.5%, markets are going to say, hey, whoa, we were way wrong here. The economy might be slowing down a lot more than we thought. So you really want to see this come in line with expectations, maybe like 3.5%. That might be your better outcome. We'll have to wait and see, but it's going to give you a big move. And then you're going to get initial jobless claims at 8:30 in the morning. This data comes in 8:30 in the morning Thursday. You're going to get a bunch of data around GDP, retail inventories, wholesale inventories, continuing jobless claims, core PCE prices, durable goods orders excluding defense, non-defense good orders, PCE prices, real consumer spending, all kinds of data here. You're also going to get the Kansas Fed Composite Index and the Kansas Fed Manufacturing Index. You're expecting those to even get worse from last month to -9 and -14 respectively. So Thursday is a huge day for the markets as far as economic data. Tuesday's the big day in my personal opinion as far as earnings. But again, Wednesday, you're going to have Meta. Thursday, you're going to have Amazon. Those guys could help move the markets, but I don't think they're going to save the markets if they have, really good earnings or really bad earnings. I don't think it's going to make or break anything at that point. Tuesday is really the big day in my personal opinion. Now, on Friday, you're going to get core PC price index month over month. You're expecting a huge rise here. Last month was 0.1%. You're expecting 0.3%. I think this probably comes in at 0.2%. That is around 2.4% annualized on a 12-month basis. That would be okay. 0.3% is 3.6% annualized. That's not as great, but it's not super high. But you definitely don't want to see a 0.3% print. You want to see 0.2%, that's for sure. Personal income month over month, expecting that at 0.4%, the same as last month. And personal spending, which I find this crazy, you're expecting to fall to 0.3%. Last month's reading was 0.4%. But yet you're expecting your GDP to come in double what it did last quarter, but you're actually expecting spending to fall. That just doesn't make sense to me, considering 70% of GDP has to do with personal spending and personal consumption. I don't know what data report is, blatantly wrong here, but one of them somebody is really wrong on, whether that's GDP or personal spending. One of them is just not correct. You're going to get PC price index month over month and year over year as well. That is your headline reading. And then final numbers for the Michigan Consumer Sentiment Survey for October, expecting 63. So you're actually expecting a big downside revision compared to what we got at the last reading, which was 68.1. Yeah, and you're expecting further validation of your 5-year inflation expectation at 3% and your 1-year inflation expectation at 3.8%. This is something that was not exactly great the last time we seen this in the beginning of October because those inflation expectations did rise so much. So that is something that could also move the markets. Now, if you guys don't understand the gist of what I'm trying to say here, the risk is definitely for a continued slide in the markets, especially if this Israel conflict does get worse. Now, in terms of maybe what you can expect from AMC stock, I mean, The data looks the same as the last video, so I'll just keep it right here for a second. If you guys want to pause and look at it, you totally can. But I mean, nothing's really changed. I think AMC is probably going to follow the markets, but what you have seen recently is AMC stock has held up better than the market. So that is also a very real possibility. I don't think you get some face ripper rally here if the markets fall, but maybe that means AMC stock does not need to crash just because it's been relatively strong recently. We'll have to obviously wait and see, and I don't know exactly what's going to happen. I'm going to give you guys my best estimate coming out later today of what I think is going to happen this week with, again, the broader markets, more specifically some technicals, some charts, as well as AMC stock, what I think is going to happen there, some technicals, some charts, go over some other news that I want to get into in that video. So stay tuned to the channel for that one. That's probably going to be around 8 o'clock tonight, so definitely be watching for that one. But nonetheless, guys, thank you for watching. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.